Hey there, the members of this group include myself, Danica, Margot, Alicia, Simran, and JY. Our business is the Toy Businesse, and we are wanting to evaluate all our financing options, which are getting a loan from the bank, family or friends, NZX, financing companies, or crowdfunding. We will discuss all our options and come to a conclusion of what works best for our company.
Hi, I'm Margot, and I'll be discussing banks as a possible finance option for our toy business. I looked at the Bank of Westpac to evaluate some business loans which could work for our business. Westpac offers a floating loan and a fixed term loan. A floating loan is where a person can borrow money and pay it back in lump sums. You can also change the repayment amounts as you like. If business is going really well, you are even able to pay off your loan early. The minimum for this loan is $3,000 and the maximum is based upon your security. Security can either be residential property, commercial property, or business assets. Westpac also offers a fixed rate loan. This loan has set repayments, which is helpful with budgeting. You are not able to pay off your loans early or in lump sums. The minimum loan is $10,000 and the maximum is again based on your security. The interest for both the floating and the fixed term loans is calculated on the daily outstanding balance and charged fortnightly or monthly. One advantage of using a bank to finance a business is that you know you're using a safe and secure provider. The bank provides you with clear repayment expectations and terms of your loan. As your business grows and develops, you have the options of different loans that better suit your business. For example, moving from a floating loan to a fixed term loan. A disadvantage of choosing a bank could be the amount of paperwork involved. This paperwork is tedious and requires a lot of time to complete. The bank will also need you to prove your ability to service the debt by showing them you can pay back the loan and the interest rate. Banks are risk adverse and won't lend money to anyone who can't pay back. Because of this, the bank is able to reject your loan and you could be left with nothing. Our business could apply for a fixed term loan of $50,000 at Westpac to fund our toy business.
Hi there, I'm Danica, and I'm going to be looking into the financing options of getting a loan off family or friends. So the Bank of Mum and Dad has helped many businesses launch. It's often available when other types of finance aren't. You just need to take a few extra precautions. So there's advantages and disadvantages of getting a loan from family or friends. The advantages include that there are no forms to fill in and no credit checks. There's low interest rates or no interest at all. Flexible repayment terms. Also, it builds a business credit history for future lenders. The disadvantages are that you can not offer floating interest rates as easily, and a loan from family or friends will most likely be a smaller loan than the bank might give. They only offer term loans, not lines of credit, and it can also damage relationships if roles are not clear or if commitments are not kept. Borrowing or getting a loan from family and friends can have many complications. This situation can very easily lead to dividing points for family and friends because of disagreements with shares, interest rates, not paying on time, etc. Also, friends or family members who lend you money may assume their financial investment gives them a stake in the company or a voice in daily operations, which could cause disruption to your plans and also make a dent in your relationship with one another. So in our case, if we wanted to use the financing option to start up our toy business, we would have to communicate with the family or friend that we think would be interested or capable of helping us by loaning us some money. We would then have to have multiple discussions, be clear with them how much we need and why, take them through our budget so that they have some insight on how we are spending their money, explain the risks and show them best and worst case scenarios, and also show them how and when we plan to repay them.
Hey, it's Alicia. Another great way to fund and kickstart our toys business is by crowdfunding. According to PledgeMe, crowdfunding is a form of raising capital through the collective effort of friends, family, consumers, and individual investors. This method of funding often taps into a broad range of individuals' collective efforts, which are mainly online via many social media and crowdfunding platforms. In simpler words, instead of getting a loan from the bank, you could get a loan from different people. Along with everything else in life, crowdfunding has its advantages and disadvantages. One of the biggest advantages of crowdfunding is that you can concentrate all of your investor discussion in a single platform, instead of constantly updating potential investors through emails, meetings, and phone calls. Crowdfunding also allows you to test the market without getting too deep into the business itself. It creates unlimited opportunities and can raise a significant amount of capital for you to start your business. However, crowdfunding doesn't find the investors for you. Launching a crowdfunding campaign takes a lot of time, work, and money, whether it's for a professional video ad or a marketing team. In regard to our toys business, crowdfunding could be a good funding option. Using PledgeMe as our crowdfunding platform, our business could start an equity campaign which is built for businesses looking to expand or raise investments from their crowd. Crowdfunding has become an increasingly popular way for individuals and businesses to raise much-needed capital.
Hi, I'm Simran. The finance company we've chosen for our finance option is Harmony Z for our new toy business. Harmony Z undergoes a credit assessment process to ensure that the money they're lending to the business is creditworthy and will be returned within the loan limit and payback terms. It requires us to provide income and financial documents to get our business loan approved. Harmony Z offers unsecured loans from $2,000 to $50,000. The interest rate range from 6.99% to 29.99% per annum, which is offered depending on borrower's credit assessment according to the credit scorecard. The payback terms are 3 to 5 years depending on the options you choose, and you can also set automatic payments bi-weekly, fortnightly, and monthly. One of the advantages of choosing Harmony Z as a financing option would be unsecured loans, meaning that the borrower's personal assets will not be used to secure the loan if they can't repay. One of the disadvantages of choosing Harmony Z would be the high interest rates. The calculations for interest rate is based on credit history that aligns with Harmony's scorecard, which is from great to average conditions. The great credit history of an individual lowers the interest rate, while an average credit history increases interest on a loan. Therefore, a toy business will struggle to pay the loan as the interest rates are significantly high and we won't be able to cover our other expenses.
Hi, this is JY. Finally, I would like to introduce the last possible financing option in ZX. What is NZX? It's a marketplace for the investor to buy and sell shares of the company among each other. Our toy company now has been considering offering shares. To do that, we have to list company through the initial public offering process. Through this process, our company is able to sell shares of the stock to the general public, which means IPO can be used by the company to raise money for expansion. The primary benefit is ability to raise capital quickly by reaching a large number of investors. Another key advantage would be we don't have to pay back. Companies selling shares is never required to repay or the money to the people who buy them. However, there is also a downside. A lot of time and expenses of going through this process. The formal IPO journey will take 4 to 9 months or more, and companies need to prepare fees and a lot of documents to inform the potential investor about what kind of investment they are making. In regard to our toy business, stock market launching will be the relatively less effective way. This is because our business has been operating for about 2 years, and investor will more likely to buy shares of bigger company. It will be more efficient if we company focus on the other option. Thank you so much.
After evaluating all of our finance options, we as a group decided that the best option for our business would be banking, as it is the most secure and reliable option. We would choose a fixed term loan with Westpac, as we feel the set repayments will help with our monthly budgeting and keep us on track to making a good profit.